Welcome to Inside India. I'm Sherry Kang sitting in for Sri Jegarajah. Here are your headlines. Oil prices are marching higher on renewed hostilities between Israel and Iran. President Trump leaving the G7 summit early back to D.C. to deal with the situation. Indian Prime Minister Narendra Modi arriving in Canada for the G7 at the invite of Prime Minister Mark Carney, where he will be holding bilateral meetings. The geopolitical tensions have investors looking for safe havens supporting the price of gold. The Indian markets come online in just about 45 minutes, and here is what Gift Nifty futures are indicating at the moment. A little bit of a pullback, not a huge drop or anything, and that has been really what we saw in a lot of these markets, really not understanding what's going on in the Middle East, the situation between Israel and Iran, and is this really the moment to de-risk further or re-risk. So I think that's really what the price action is suggesting at the moment. And quick look at Asian markets that I do want to bring our viewers. And it has been, a mixed picture, and that is really what we see here on the wall there. And if anything, gains over in TAIEX and South Korea stands out to me. A lot of chip names are in the money, and there was that nice handover from Wall Street's chip names as well. But we do see some of these markets, for example, China and as well as Hong Kong, out of money as we speak. Quick check on the oil markets as well. And I do want to bring to your attention what Axios is reporting just a few minutes ago, that President Trump's team is proposing talks with Iran this week on a nuclear deal and a ceasefire between Israel and Iran. And we do see that bid that we saw coming through earlier this morning staying intact. So we do see 72.55 for light crude, 73.93 for Brent crude as we speak. But just going back to the report from Axios, the meeting would be between U.S. envoy Steve Witkoff and Iran's Foreign Minister Abbas Araghchi. Now, this as Israel and Iran did continue to exchange fire for a fifth straight day, with Israel striking Iran's state broadcaster. But hours ago, Israel telling the public that they can safely leave protected shelters. Now, world leaders urging de-escalation, with Trump calling on Iranians to evacuate Tehran overnight. That certainly spooked a lot of investors there, especially pushing up the oil bid. That was really the trigger point, I believe. And U.S. Defense Secretary Pete Hegseth saying that Trump is still aiming for a nuclear deal in an interview. Now, many countries are looking to get their citizens back safely. India has started relocating its nationals from the capital of Iran to safer areas and is mulling exit routes from both Iran and Israel. Now, land routes are being worked out for evacuation since airspace for both the countries remain closed. Now, this comes as French President Macron hinted ceasefire talks could be coming soon. Macron did say the U.S. has made an offer to meet with Iran.
There is an offer that has been made, especially to have a ceasefire and to initiate broader discussions. And I think this is a very good thing. So now we need to see what the stakeholders will do.
Macron's comments came on the sidelines of G7 in Canada. President Trump left the summit on Monday night, heading back to D.C. one day earlier than planned. His day in Canada was busy, with plenty of bilateral meetings on the sidelines. CNBC's Megan Casella has the latest from the Canadian Rockies.
A full day of headlines from the first day of the G7 summit here in Alberta, Canada. President Trump sat down with at least 5 different world leaders for bilateral meetings and pull-asides that we know of, included the leaders of Canada, France, Germany, the UK, and the European Union, making news as well on a number of topics. First, on the ongoing tensions in the Middle East, the president maintaining throughout the day his support for Israel, saying they were doing very well and saying that Iran was foolish not to sign on to a deal. He also said the Iranians are basically at the negotiating table and, quote, as soon as I leave here, meaning Canada, we will be doing something. So keeping hope alive for some sort of a negotiated nuclear deal, especially as markets were up on the day on the hopes that some sort of an agreement could be reached in the Middle East. A White House official did, though, confirm to NBC News that the U.S. would not sign on to any joint statement coming out of the G7 that urges de-escalation in the Middle East. It is likely that other G7 leaders would sign some sort of a statement, but the White House will not be a part of it. On Russia, the president was a little bit non-committal on this first day of the G7 on the idea of sanctions, saying first that it could happen when asked about it by a reporter, but saying later in the day that sanctions are very expensive for the United States, so not making it clear there which way he would move forward. And then finally, the other big topic here at the G7 has been trade, with President Trump's tariffs really being the elephant in the room for every ongoing bilateral meeting that we've been tracking. The U.S. and the UK did seem to advance the trade framework that they first announced in the Oval Office just about a month ago, furthered that, put some more meat on the bones there. But otherwise, even though every other G7 leader is anxious for some sort of a trade deal, we have not seen any concrete news on that front. Everybody is looking for a way to try to avoid those tariffs that are set to kick back into effect just next month, July 9th being the tariff deadline. But so far, despite these bilateral meetings, no concrete details of any actual trade agreements between the U.S. and any of these other G7 nations. Megan Casella, CNBC Business News, Alberta, Canada.
Meantime, Indian Prime Minister Modi has also landed in Canada to attend the G7 summit on a special invite from Mark Carney. Modi will address the G7 outreach session today. Now, this is the Indian Prime Minister's first visit to Canada in over a decade and comes amid some protest from the Sikh community in the country. Before heading to Canada, Modi has made a brief stop in Cyprus, holding trade talks and expressing concern over the Israel-Iran conflict.
We both expressed concern about the ongoing conflicts in West Asia and Europe. These conflicts have consequences beyond their immediate regions. We both believe that this is not an era of war. Dialogue, resolution, and restoring stability are the calls of humanity.
India is a net oil importer, closely watching the rise in oil prices, of course, and reports suggest that the country is planning to quadruple its uranium imports until 2033. Now, that is to strengthen its nuclear reactors and build energy security. And we've got Ken Lee joining us. He is the head of policy and industry engagement at World Nuclear Association. He's joining us live from the Energy Asia 2025 conference. King, it's great to have you on. Thank you so much for joining us. So no doubt, nuclear is having its moment, and pretty much around the world, and not just in India. But securing uranium, it could be crucial down the road, just as we see a lot of countries fretting over supply chain of rare earth situation as well.
Yes, obviously uranium is an essential fuel for nuclear reactors. As the world expands nuclear energy, we have great support recently, so countries are seeking to secure nuclear fuel and uranium.
What would be some of the challenges for countries like India to get enough supplies of that? I mean, quadrupling its supplies by 2033, does that sound too ambitious to you?
There are sufficient nuclear fuel uranium for the demand. For example, in India at the moment they have 24 reactors and of 8 gigawatts. At the moment, India is building 6 additional reactors under construction, about 5 gigawatts. Their plan to, obviously with their goal to decarbonize by 2070, have a plan to build 100 gigawatts by 2047. So as part of that plan, India will seek to have fuel for these additional reactors they aim to build.
Okay, and that nuclear energy capacity to reach 100 gigawatt by 2047, do you think it's doable because the Indian government is opening it up to foreign investors as well as private sector money?
Yes, with that ambition, the government, Indian government have taken a number of measures to facilitate both other state entities and private company to invest in nuclear energy. So they have taken a number of measures in terms of amending their liability laws, increasing supply chain, developing new skills, as well as facilitating new approval. So that have included new interests by new state utility power company, NTPC, looking to build 30 gigawatts of nuclear reactors, as well as Indian private utilities, Adani's and others as well.
So for some of our viewers who might be an interested potential investor in the sector in India, what are some of the opportunities, do you think, can you talk about here, especially given the fact that state-owned entities are dominant players in the nuclear energy sector at the moment?
I think there are opportunities both for state, increasing the state entity opportunity. They currently in India, the state nuclear operator is NPCIL. So there are other state power utility, as I mentioned, NTPC is interested in building nuclear power plant, and also other private power utilities. But also not only building large reactors, other utilities are looking to new technology, what we call small modular reactors. They are smaller, so they are potentially lower cost and faster to build, and also can be used for a number of different range of applications as well.
Yeah, and I love that you brought up SMR, and of course, really the up-and-coming technology here. But this is, sure, it has been done, but it's not commercially proven just yet, I would say. And correct me if I'm wrong, King, because there have been a few SMRs that have been built, manufactured, shipped, and currently in use. But commercial deployment, we cannot say that it's been really tested, can we?
Well, obviously, these are new technologies, around 80s under development. Some are already in operation. So, for example, there's a floating nuclear power plant been in operation in the Arctic region in Russia since 2019. And there's what we call a high temperature reactor been operating in China. And recently in Canada, Ontario government have just given the approval for the construction of SMR reactors in Canada.
I understand that India is going for its own technology, indigenous technology, to push for this nuclear goal here. So how does SMR fit into that kind of vision of India?
Well, obviously, we can look at nuclear in terms of, from a size point of view, what we call gigawatts size large reactors. SMR, they tend to be about 300. But also, there's a small, another class, what we call micro reactors, of about 10 gigawatts, 10 megawatts for remote application and off-grid. So for India, all these mixture of nuclear technology can be integrated into the energy system, into the grid, both for power cities as well as for the decarbonizing industry and formulating into different applications.
So nuclear at the moment, King, accounts for about 2 to 3% of India's total electricity generation as of now. What kind of meaningful part of mix is it going to be by the target year of 2047, I believe? And the fact that India is going for self-reliance when it comes to its nuclear push, does that make it faster or does it slow it down a little bit?
Obviously, for India, it's looking for energy, all form of energy, in terms of it's as part of its energy mix, because there's a huge requirement for of energy for its population and economic growth. The 100 gigawatts, even though it's ambitious, is deliverable for India, but obviously that's a part of India energy mix.
Do you think India will go for imported reactors as well? I know that they can be, I guess, pricier than imported ones. Indigenous ones. But for India, is it more of a priority to get to that nuclear goal than turn to its own technology?
In my view, India will pursue both paths in terms of adopting its industry, domestic technology, both large reactors and SMR, which is pursuing. India already have Russian reactors operating 2 units and 4 units under construction, and it's been in discussion with France, EDF, to build French reactors, and also been in discussion with Westinghouse in US to import their technology. So I believe those, with the recent change of the liability laws, that will facilitate this project to move forward.
King, it's great to have you on. Thanks for the deep dive into nuclear energy in India. That was King Lee from World Nuclear Association. Inside India is back in 2. More issues at Air India days after the fatal crash involving a Boeing 787 plane in Ahmedabad last week. At least 3 of the company's flights reported technical snags midair and were either diverted or took a brief inspection halt. Air India, in the meantime, is inspecting all of its Boeing 787 Dreamliner fleet. Now, the head of Boeing Commercial Airplanes, Stephanie Hope, visited India as investigators try to find the cause of the 787 crash that took at least 279 lives. CNBC TV 18's Medea Mujawar is on the ground and files this report.
We are just few meters away from the crash site where Air India plane AI-171 crashed on the 12th of June. The area is now cordoned off. No visitors are allowed inside, and only the investigating teams, including the AAIB, DGC officials and Air India officials, are allowed inside. They're visiting the crash site, assessing the wreckage, looking for evidence that can help them find out the reason for the crash. In the hospital, at the mortuary complex, several families are waiting for answers. They are waiting to get a call from the hospital to collect the mortal remains of their loved ones. Authorities are releasing bodies as and when their DNA samples match, but there are many bodies that have not been discovered yet. There are many samples that are not being matched yet. So distressed families, helpless families are also visiting the crash site here, assuming that they will never get to see the mortal remains of their loved ones. Meanwhile, the Director General of Civil Aviation, which is the aviation regulator in India, has mandated additional maintenance and safety checks for Air India's 787 Dreamliner fleet, considering this is the first time that a 787 Dreamliner has been involved in a fatal crash. NTSB teams, Boeing officials have also visited the crash site. Investigating teams will now decode the black box that they have recovered. They will go through the flight data recorder and the cockpit voice recorder to determine what could have led to the crash of this 787 Dreamliner that took off, was at 600 feet and started descending and crashed and exploded. The pilot had only made a mayday call, and even before the ATC officials could get back to the pilot, the plane had tragically crashed and exploded.
All of this as the Paris Air Show kicked off yesterday. It's one of the biggest events for the aviation industry, of course, but the mood this year, as you would expect, is a lot more somber. CNBC's Phil LeBeau reports.
Against the backdrop of last week's Air India crash and conflicts in the Middle East, the Paris Air Show kicked off with a slightly muted tone and fewer big orders than many expected. Airbus is expected to announce the bulk of new orders at the show, including its first with Poland's LOT Airways, up to 124 A220 planes, an order for up to 50 A350-1000s with Riyadh Air, and 27 A320 and A321s with ANA out of Japan. With long-haul international travel increasing, the Airbus CEO sees rising demand for wide-body aircraft like the A350.
The wide-body market has been more impacted by COVID than the narrow-body markets. The regional traffic recovered faster than the international traffic post-COVID, and therefore there's more to catch up, and that's what we see now. So we have a lot of demand because it's catch-up game after 4 years of COVID, I think.
As for Boeing, this show was expected to be a chance to show the company's turnaround. Instead, CEO Kelly Ortberg has canceled plans to be at the show in light of the Air India crash, and the company is keeping a lower profile than previously planned. Meanwhile, defense spending and military investments are generating more interest given the conflicts in the Middle East and in Ukraine. The defense focus is a welcome change for many aviation manufacturers, especially after a number of years where many countries, including here in Europe, were underinvesting in their military needs. Phil LeBeau, CNBC Business News, Paris.
The situation in the Middle East also echoing here in Asia. China issuing a warning instructing all Chinese citizens to leave Israel with immediate effect. Elaine Yu has more details. And of course, that this is yet another layer that could actually spook a lot of people watching the situation.
That's right, Sherry. China's embassy in Israel has warned citizens to leave via land crossing toward Jordan ASAP, and that comes as Israel's airspace remain closed. The embassy said in a notice that the conflict continues to escalate with civilians facilities damaged and civilian casualties increasing. So this evacuation warning is a sign that China has immediate safety concerns for its citizens and that it is expecting that the situation could worsen. Now, for context, many Chinese citizens in Israel are construction workers. They help fill a large labor gap left by Palestinian workers. And increasingly, construction workers from India have been recruited to replace Palestinian workers that have been barred from entering Israel. There are also Chinese professionals working in tech in Israel. Chinese tech companies have set up R&D centers there. For example, Lenovo, the IT and computer giant, has a cybersecurity innovation center, and it is looking to expand in Israel. But the embassy's warning shows that, they have safety concerns beyond just business interests. So if this conflict escalates, it could have profound impact on China's energy security. China imports most of Iran's oil exports, and these imports often come at steep discounts on sanctioned barrels. So if there's a bigger conflict, particularly any targeting Iran's oil infrastructure, which we're closely monitoring, or disruption of the Strait of Hormuz, that could severely impact the supply. So we'll see if this gives China the opportunity to play peacemaker in the region after it brokered the Iran-Saudi rapprochement. Sherry.
Thank you very much, Elaine, for that. And of course, we'll continue to watch the situation as Axios is reporting about, of course, some kind of a ceasefire discussion between Iran and Israel as well. Elaine, thank you very much for that. Coming up on the show, gold prices glitter. I like that. Amid geopolitical risk events, what could be yellow metal's trajectory going forward? It's had a nice run so far. We'll discuss that with Pranav Mar of JM Financial. We'll be right back. We are counting down to the market open in India. Now, this is how we are shaping up in terms of the futures action. Very muted kind of open that we are getting in terms of the futures indications as well. But we'll see how things go because things are moving, especially when it comes to the Middle East conflict story between Israel and Iran. And just to want to get you up to date in terms of what's coming out of G7, of course, happening in Canada. And we've got the leaders' statement on developments between Israel and Iran. So the statement goes that they urge for a resolution of the Iranian crisis, and it adds that they've been consistently clear that Iran can never have a nuclear weapon. So it's just very much in line with what Israel wanted to get done in terms of really, stopping Iran from enriching its nuclear program as well. And further lines that we're getting in terms of reiteration of their support, G7 support for the security of Israel. And of course, this statement coming out as we are seeing Axios report suggesting that the White House is discussing with Iran a possible meeting between U.S. envoy and Iranian foreign minister. So that could be something that could move the story forward as well. So that is, those are some of the key lines that we are getting out of G7 this morning in the Leaders Summit. And the BOJ standing pat on rates as expected. Our Lin has the breakdown of the decision as expected. Lin.
Yes, indeed, Sherry, we have just received the decision and the policy rate is unchanged at 0.5%. Now, that was a unanimous decision. What the market was more focused on was the interim assessment in terms of the Bank of Japan's bond tapering program. And again, as expected, we have seen that they have decided to reduce the JGB purchases from 400 billion yen to 200 billion yen each quarter from April 26 onwards. That decision was by an 8-1 vote, but as I said, all of this has been heavily telegraphed by the central bank prior to today. And when we look at the dollar yen, it is largely unchanged at the moment from where it was prior to the decision coming out. 14472 is where we're at. Let's just have a check of JGBs as well. And we are seeing actually a little bit of elevation in terms of the yields. That 10-year JGB yield currently 1.462. Let me get you some of the commentary in terms of this decision as well. The Bank of Japan saying that it's necessary to pay attention to the impact of trade policies on financial and FX markets, keeping in mind as well that even though the leaders of Japan and the US did just meet on the sidelines of the G7, there was that soft target of potentially some sort of a breakthrough. There was no breakthrough forthcoming today. We know that the Bank of Japan, and again, we're seeing that reiteration in the monetary policy statement, that there is extremely uncertain circumstances of how global trade policies will evolve and how overseas economic activities will react to them. That has been the story consistently, keeping in mind at that last decision in May, we got the revisions in terms of the central bank's outlook, both in terms of growth, in terms of inflation, and some sharp revisions downwards as well. So really, that is the key here. Other flashes that are coming through as well, we're hearing that on inflation expectations, the Bank of Japan saying that they have risen moderately. And again, I think on that front, it's worth contextualizing for our viewers. We're seeing that headline rate, 3% and higher for the last 3 years or so, but the underlying inflation, which is I guess the key signal for demand-driven inflation is still below that 2% target, and that is the concern when we speak to economists or when we hear some of the commentary from Ueda that if they do increase interest rates now, that could have an impact on the real economy as well. Just looking through in terms of some of the other flashes that are coming through, the Bank of Japan saying that they plan to buy 325 billion yen of 3 to 5 year JGBs 3 times a year in that July-September period. So they're really laying out here now what are the numbers in terms of their purchases going forward as well. So that is the lay of the land here, Sherry. As expected, policy rate unchanged, 0.5%. As expected, we're getting a change in terms of the bond taper program from April 2026.
Yeah, and so we're going to be hearing from Governor Ueda later on today in the news conference, and obviously the BOJ is expected to signal that they're going to continue rate hikes, I would imagine. I mean, the latest lines out of the BOJ, the Japanese economy has recovered moderately despite some weakness. I mean, that does sound a little bit hawkish to me.
That is a statement that we've seen consistently from the BOJ, that the economy is recovering moderately but with some weakness. But you are absolutely correct that we have heard the BOJ governor time and time again signal that they want to continue to normalise monetary policy if the conditions allow for it to. And I think this is something to watch out for in terms of the press conference, because in terms of the inflation situation, a lot of it, as we've been talking about, is supply driven, whether that's the oil price, whether that's in terms of rice prices, whether that's, in terms of supply chain issues as well. But inflation expectations among households and corporates, that is changing, and that is going to potentially have a material impact on what the central bank does going forward as well. Sherry.
Thank you very much, Lynn, for that. And just to close the story around G7 and what's happening on the sidelines, a lot of bilateral meetings as well. And we've got South Korea's presidential office, of course, President Lee Jae-myung is expected to hold summit with Japan's Prime Minister Ishiba on the sidelines of a G7 summit. So there we go. We got that confirmation, and we'll see what kind of conversation they end up having. And let's move on here and check in on gold prices. Of course, this is really the story that we've been watching, especially since early April on the back of the Rose Garden tariff announcement. But it has been really turning higher pretty nicely over the last couple of years as well. 33.86 is what we see for the spot gold at the moment. And of course, we've got the yellow metal up close to 30% just this year alone. And we've got Pranav Mir. He's the Vice President, Equity Broking Group, Commodities Research at JM Financial, joining me live this morning. So when it comes to gold, how much of a leftover geopolitical risk premium do you think there is?
As far as looking at the current market situation, what has been happening in the global markets, we continue to maintain a positive view on gold. The risk factors continues to remain in place. There has been geopolitical tensions in the Middle East. The Russia-Ukraine issue continues to remain in place. Also, we have the trade tariff-related uncertainty in the market, with the deals not yet still done with the US and its trading partners. So that all this risk is likely to keep the bullion supported, although most of them have been priced into the current prices. But still, the downside looks limited due to the persistent weakness in the US dollar index. It has fallen yesterday below 97.50 before recovering today in today's session. Any peace deal between Israel and Iran over the Iran's nuclear program, we may see some risk premium subsidizing in the gold prices. We could see a corrective move as well in the coming trading sessions, but those corrective moves should be a buying opportunity for investors looking from a short to medium term perspective.
Yeah, and definitely this is really the story of this year. Gold churning higher, not just because of what's going on between Israel and Iran, but it's the tariff situation, the de-dollarization story as well. And do you think the premium coming from that layer is staying intact for the rest of this year?
Yes, possibly. Yes, we may see that the factor getting supported into the gold prices. The de-dollarization factor, most of the countries are now looking to expand their reserves into other currencies, trying to push their own currencies. So that although it has not been done on a large scale basis, but they have been trying to initiate, or we can say do the agreements with or do the trades with their local currencies. So that factor will continue to keep the gold prices supported in the rest of the year.
What about the retail investors' behavior around gold? Potential changes in government taxes I was reading about. Would that affect gold prices?
Yes, definitely. If any kind of import duties are reduced on gold prices, especially in the Indian markets, there it would increase the retail buyers' participation. It would be a little bit cheaper for their pockets as well. Current duty is around 6%, which was reduced last year from around 15%. So we don't expect a bigger reduction going ahead. But yes, if anything comes on the duty part, it would be beneficial from a retail investor's perspective. Currently, the demand outlook remains bleak on the retail terms. Yes, there has been some good buying seen in the exchange traded funds like ETFs, where people have been investing in small tranches, and so that demand continues to remain in play. We have seen some liquidation over the last month, but if any uncertainty rises in the global market, we may again see inflows coming back into the ETFs.
And, the equity side of the story in India has made a pretty remarkable comeback since early April. So do you think perhaps retail investors could shift their focus back to equities or market-linked products and perhaps, see gold as close to toppy? And could that actually have a negative impact on gold prices?
Equities in the Indian markets have been doing good. We have seen periods of corrective moves as well. But if we see the prices, the downside has been limited considering the domestic market fundamentals. What investors have been doing over the past couple of years, they have been diversifying their portfolio. They have been adding gold as well to their portfolio. So that has been balancing out the volatility into their portfolio, and so that remains in place. Yes, there is a possibility that if the things in the global market subsidizes, if everything goes in place, if we see economic growth, then people may reduce their holdings into the gold and may shift towards equities as well.
What about gold versus some of the other precious metals? I mean, I was just reading one commentary around how silver could outperform gold. I mean, is gold your favorite of the pack for the rest of 2025?
Gold always remains the best among the pack, but we have already seen a tremendous rally in gold prices so far this year. It's up more than 25%. Silver has relatively underperformed gold. If I consider gold and silver buying together as a basket, I would add silver at current prices. I would add silver at 70%, and to negate the high volatility in silver, I would add gold as a 30% of that basket. So this is how I would like to invest in both gold and silver for the rest of the year.
What about copper? Because this is really the metal that many believe could be really the proxy of global economic strength, and it ties in more closely to China's story, perhaps. But do you have a number around copper?
Copper prices, I feel we may see some consolidation. Most of the things depends in copper depends upon how the U.S. tariffs are being implemented. There has been an investigation going on in the U.S. regarding the copper imports, but there has been no concrete outcome. Recent duty hikes on steel and aluminum has definitely supported the copper prices. we may see LME copper prices rising towards 9,950, 10,000 levels going ahead. But again, then much depends on how the US tariffs are implemented in the coming months. And if anything, it comes on copper prices, we may see prices moving further up as well. Looking from the demand perspective, the demand remains strong. For copper, the usage has been increased across industries, so that factor will keep the downside limited into the copper prices.
You know, this is something that I brought up at the top of the interview, Pranav, but what about this whole tariff situation, trade tensions between the U.S. and China? And there was a lot of outflow from the dollar system into gold and into crypto, right? And you were saying that that could actually continue for a while. But I wonder if at one point people are going to realize, okay, gold, sure, some industrial use, but dollar gets the system going. And, you know, I just want to get your line from this high-level view of the financial system, where it's headed. Because if you ask some of the crypto people, they say that crypto, Bitcoin, is the new digital gold, the new dollar. What do you say?
It's not easy to replace the US dollar on an immediate basis over a period of time. We may see a replacement coming in for the dollar, but it's not easy. It's a globally recognized currencies. The commodities that we trade, the transactions we do mostly are in the dollar terms. But crypto, yes, there have been talks about the Bitcoins and other cryptos may be replacing dollar, but it's far from the current market scenario. And I have not been tracking much on the Bitcoin part, but it won't be easy to replace the US dollar when it comes to the trades and everything.
All right. And let's talk about what the central bank in India is doing in terms of very aggressive gold buying, right? Reserves reaching 85.88 billion US dollars. How does this impact the domestic gold market and sentiment? And are they going to keep going?
It's a very tricky thing because the central banks globally have been putting in their money into diversifying their reserves into gold. Not only India, across the world, we have seen central banks adding gold to the reserves. If we can look at the recent data that have been coming out in the market, it is showing that the reserves have increased nearly 15 to 20% of most of the central banks. That is, the gold reserves have increased. So the gold reserves that goes, it's for the central bank, which it has been increasing. While the domestic retail demand continues to remain in place, the demand is specific for requirement-based demand. We don't see a big demand coming in gold at current price levels from the retail investors. And as I said earlier, the ETF has been a value-added thing where one can put their money in tranches, and that is what is attracting more retail investors for gold prices.
You know, speaking of the RBI, their new scheme around basically lending against gold and silver that is expected to start in April next year. How is this going to change the narrative around gold in India or even solidify? I mean, the gold loan market, can you just talk to us about that?
I've not been tracking the gold loan market very closely, so won't be able to comment on that part.
All right, fair enough. But saving the best for the last question, your range for gold this year.
I feel gold prices upside, it has the potential to move further up towards $3,700, and downside we could see prices coming down close to $3,000. So what comes first would be the bigger question, and depends upon the ongoing developments in the market. But yes, the underlying momentum is expected to remain positive.
Pranav, it's great to have you on. Thank you so much for your lines this morning. That was Pranav Amir from JM Financial speaking to us on gold. We've got a bunch of macro data from India. First up, wholesale inflation in the country easing to a 14-month low, coming in at 0.39% in the month of May, beating the Reuters poll expectations of 0.8% by a wide margin. And we've got unemployment data as well. This the second time in India that released this data on a monthly basis. The month of May seeing higher joblessness compared to April, rising at a rate of 5.6%. This as farm activities dropped at the end of harvest season. Meantime, trade deficit narrowing sharply in May, slowing imports and seasonal betterment in exports, pushing trade deficit to $21.88 billion. Now, that number was at $26.42 billion in April. Most of the import moderation was in oil and gold. Indian markets have just joined the trading day. Let's take a look at some of the early movers after a quick break. We're back to you. This just in, and some lines out of a U.S. embassy in Israel. Now, the statement goes that at this point in time, U.S. embassy is not in a position to evacuate or directly assist Americans in departing Israel. And of course, the U.S. embassy has directed that all U.S. government employees and their family members continue to shelter in place in and near their residences until further notice. And of course, what really moved the needle in terms of the headlines, at least, was President Trump's social media post urging basically all Iranians to evacuate Tehran as well. So interesting situation and uncertain situations, to say the least, what's happening in Israel and Iran. Now let's go back to Indian markets. Indian markets are online, and we've got the Nifty 50, BOJ very much in my mind this morning. Nifty 50 underwater, down about 0.25%, not a huge drop, but edging lower. Perhaps it's really investors, traders, not seeing any fresh catalyst to buy into this market, given the ongoing conflict between Israel and Iran. And dollar Indian rupee at 85.93 is what we see there. So the dollar is getting a bit of a bit there. Let's take a look at some of the movers in the markets today. Shares of National Thermal Power Corporation higher by 0.5%. The government-run power generation company said that it will consider raising up to 180 billion rupees through the issuance of bonds at its upcoming board meeting scheduled for June 21st. The company said the funds would be used for capital expenditure, refinancing of existing loans, and general corporate purposes. And this is what the shares of Tata Motors are doing early minutes into the trade and giving up about 1% after the Indian auto major's UK subsidiary Jaguar Land Rover shared a muted outlook for the full year of 2026. JLR expects EBIT margin for next year to be in the range of 5 to 7%, compared to 8.5% posted in the previous fiscal year. It also sees close to zero free cash flow in the current fiscal year. And we're also watching the shares of Tata Consultancy Services. The share is really just not moving in either direction, staying very close to the break-even point. The Indian IT giant has partnered with the Council of Europe Development Bank to modernize and automate the bank's reconciliation processes. TCS is going to use its core banking software suite, TCS Banks, for reconciliations using artificial intelligence. And one final check on Asian markets. Before we go, it is a very patchy picture, as you can see from the color itself. And if anything, we've got Nikkei 225 over in Japan, higher by 0.5%. But many of these markets putting on very small moves, given the uncertainty that the market has in terms of the situation in the Middle East. And that's all the time that we have today on Inside India. Keep watching CNBC. Access Middle East is coming up next.